Dirty dealings, corporate battles, consumer woes. This is Evening 5. IJM Corp said it is buying a 50% stake in UK-based construction firm JRL Group Holdings for £50 million or 283 million ringgit to expand into the UK and strengthen its core construction capabilities. In a media release, IJM Corp said the transaction involves its subscription to 50% of the enlarged equity interest in JRL. The fresh capital will help to strengthen JRL's balance sheet, enhance liquidity for working capital, and support future growth. JRL racked up more than £80 million in losses in the past 2 years in what the British firm described as the most challenging times in its 27-year history. However, IJM Corp highlighted in its statement that JRL returned to the black in 2024, recording a revenue of £311 million and a profit before tax of £9 million for the first 6 months of the financial year. JRL's sizable order book of £1.5 billion provides earnings visibility for the next 3 years and access to a robust pipeline of projects, says IJM Corp. It also complements its own outstanding order book of 6.4 billion ringgit. The JV, which focuses on urban regeneration and mixed use over railway developments across multiple strategic sites in London, has a combined gross development value of over £3 billion. IJM Corp's Group CEO and MD Dato' Lee Chun Fai said that the group's investment in JRL marks a strategic step, helping to strengthen its construction portfolio and leveraging JRL's technical expertise and market presence in the UK. JRL Managing Director John Reddington said the group is excited to align with IJM Corp, the JV strengthening its position and helping to advance its pipeline of developments in the UK. Hyundai Motor will open its first plant in Malaysia next year with an investment valued at 2.16 billion ringgit, Bernama reports. Investment, Trade and Industry Minister Tunku Datuk Sri Zafrul Abdul Aziz said it will be the South Korean automaker's largest investment in Malaysia and provide many job opportunities. He elaborated that a total of 7 car models will be produced within 5 years. Prime Minister Datuk Sri Anwar Ibrahim is currently on an official visit to South Korea. He held a closed-door meeting with South Korean conglomerates Hyundai Motor and OCI Holdings on Monday. Next year, the two countries will be celebrating the 65th anniversary of the establishment of diplomatic relations with each other. RHB Bank said it would divest a 99.95% stake in RHB Securities Thailand to Singapore-based Phillip Brokerage for 1,253.77 million Thai baht or 161.8 million ringgit, marking its exit from Thailand's stockbroking and securities market. The stake is currently held via its wholly owned RHB Investment Bank. The divestment is expected to be completed by the fourth quarter, subject to the approval of Thailand Securities and Exchange Commission. The proposed disposal is not subject to the approval of the shareholders of RHB Bank or any relevant regulatory authority in Malaysia. RHB Banking Group Managing Director and Group Executive Officer Dato' Muhammad Rashid Mohamad said that the decision to divest RHB Securities Thailand follows a comprehensive review of its business and the operating environment there. He adds that this is part of its ongoing strategy to focus on markets where it can achieve the greatest impact. RHB had also in 2020 sold its Singapore stockbroking business, RHB Securities Singapore, to Phillip Securities. A year before that, RHB IB shuttered its operations in Hong Kong due to an increasingly challenging brokering environment. RHB Securities Thailand, which has a regional office and 5 branches, has been loss-making for the past 4 financial years between 2020 and 2023. The banking group blamed the loss on the challenging competitive landscape in Thailand's stockbroking and securities industry, coupled with RHB Securities Thailand's lack of scale to compete competitively. Proceeds from the stake sale will be utilised to support the working capital needs of RHB IB. Looking ahead, Rashid said the group is excited to refocus its efforts to align with its strategic priorities. He adds that RHB Bank Thailand remains a pivotal driver of growth and an essential component of its original regional retail banking footprint. TMK Chemical, which is set to list on Bursa Malaysia's main market next month, is planning to double its annual manufacturing capacity with its second plant funded by proceeds from its initial public offering. The group, which specializes in chemical management and storage solutions, is aiming to double its existing capacity of 216,000 metric tons to a maximum of 432,000 metric tons of sodium hydroxide at a concentration of 32% with the new Banting Plant 2, according to Deputy GM Long Xiao Long. TMK Chemical is looking to raise 385 million when it goes public, with its shares priced at RM1.75. TMK Chemical is controlled by Dato' Lee Soon Hyun, the youngest of the billionaire Lee brothers behind plantation conglomerate Kuala Lumpur Kepong. Soon Hyun holds a 50.6% stake in the company. TMK Chemical currently operates 15 facilities across Malaysia, Singapore and Vietnam, along with 2 terminals and 1 manufacturing plant in Malaysia. The group has earmarked 23.4% of its proceeds for the construction of Banting Plant 2. TMK Chemical has also allocated 99.1 million from the proceeds for acquisitions and investments in companies to accelerate its expansion and to strengthen its regional presence. The federal government may consider other proposals after facing pushback from highway concessionaires on the implementation of the multi-lane free-flow system. Deputy Works Minister Dato' Sri Ahmad Mazlan said 13 out of 33 concessionaires had expressed their disagreement so far with the 3.5 billion barrier-free toll system proposal, while negotiations are still ongoing with the remaining 20. He said the negotiation process would continue until December 16th. Ahmad did not elaborate on the alternatives. The proposed MLFF system is designed to replace the current booth-based toll collection system with overhead gantries. The system is estimated to cost 3.46 billion ringgit to implement across 33 highways in Malaysia. The Ministry of Works has previously expressed hope that the system can be implemented by year-end. A private firm, 60% owned by IJM Corp and 40% owned by a state-linked entity, held a briefing with the Malaysian Highway Authority and the Ministry of Works in July last year to present its MLFF proposal to highway concessionaires, according to a report by the Edge Malaysia Weekly. One of the hurdles for implementing MLFF is the need to establish a new concession for the existing 33 concessionaires, which would result in a concession of concessions, Ahmad said. Additionally, the government may need to amend certain laws, including to address the actions of parties who evade toll payments.